Good morning, everyone. Welcome. Going to give it a few minutes for everyone to come on in. Good morning, everyone. My name is Lauren Simpson, and I am with the Small Business Development Center, also known as the SBDC. I am joined today with my colleague, financial extraordinaire, and I think she just knows all things, Miss Lori Williams. Welcome, Lori.
Thank you. I'm so excited to be here and welcome everybody to another episode of our show.
Yeah, so that show she's mentioning is SmallBiz Talk. Again, the name of the show is SmallBiz Talk, and it's solutions for your small businesses. I'm going to backtrack just a little bit and discuss who we are. So again, my name is Lauren Simpson, and I'm with the SBDC, or the Small Business Development Center. And let me just share a little bit about who we are. We are a national program with over 1,000 locations throughout the country. So any state you go in, you'll find a SBDC office somewhere in the region. We help stimulate economic growth through business advising and development. And the really great thing about our program is that, and the resources that we offer, is that they're at no cost to you. So your tax dollars are at work when you work with us. All of our resources are free. So trainings like this one this morning is free for you. Again, we're located throughout the country. And then for the Los Angeles, Santa Barbara, and Ventura area, we have locations shown right here in front of you. You'll see we're as far out as Santa Clarita and Camarillo, all the way to Pasadena and beyond, and down in Long Beach. Long Beach is actually where we're headquartered for the Los Angeles network. And again, services that we offer, it's no cost business advising. So you can contact your local SBDC office and be connected with a business advisor, an expert in various fields, such as Lori. And you'll be connected and be able to, ask all the questions that you need to ask and kind of get your business up and going. And then we offer, again, virtual trainings, just like the one this morning. Again, we are here to help. Contact us today to get started. You'll see our phone number on the screen. It's that 866-588-7232 phone number, or you can reach us via the website, which is smallbizla.org/new client. On that website, you'll be able to find additional information related to the resources that we offer, who the SBDC is, who we work with, as well as other workshops that we offer. So now I am going to hand it back over to Miss Lori Williams. Again, you are joining us for Small Biz Talk. We are here every Wednesday at 10 a.m. Good morning, Lori.
Good morning, Lauren. And before I start, let's mention, because you're going to put certain information in one of them and they're going to put questions in another one. Which one of them is it that you want to have them direct to?
Thank you so much for that reminder. So we are going to be answering questions. Please enter those into the Q&A. Again, all questions, please enter those into the Q&A. The chat will be where I list various links that Lori may mention, as well as links to reaching out to the SBDC. And then we also have a contact form. And so a link to that form will be there. And on that form, you'll be able to send in questions, as well as offer any suggestions to future shows. So that's where we get kind of interactive, right, Lori?
Exactly. I wanted to make sure they knew about that. Thank you so much.
Of course.
Okay, guys, give me a second to get a presentation set and we will go over what we're going to talk about today. Let me just get the Zoom links and everything set up. Okay, once again, welcome so much to the show. As Lauren mentioned, this is our third one, I believe, Lauren. This is, I think, our third one. So we're just getting started. We're going to have lots of new, exciting things coming up. And what we're doing in the show, just kind of a overview, it's going to be a talk series. We're going to cover business topics. We're also going to have real life situations and guest speakers and interviews. So I just want to give you a preview to the next show, which is December 1st. We're going to have a guest speaker come on. This is a person, a woman who experienced issues with her company during COVID, just like many of you did. And she basically recreated her business model throughout. She's going to share her experience, share what happened, and share where she is now and where's the company is going. So that's going to be a great, exciting interview you're going to love to hear. Now, Lauren mentioned that we're going to do questions. What I realized is that people are very accustomed that know me. They like asking me questions. Know I can pretty much answer just about every question that you ask, make up if I have to, but I decided that I really have to include the Ask Lori question part. So every single show, the last 15 minutes, 30 minutes, depending on time, we're going to include the Ask Lori. So you can either put the questions in chat, or as Lauren discussed, you can actually send a question ahead of time. Lauren, do you want to remind them again how they would send the question ahead of time?
Yes. So if you look in the chat, I've entered a URL. I'll enter it again now. And that URL is to a form. Here it is there. Just click that link. And then once you click that link, you'll be taken to a form. You'll enter your name, your business, contact information, but then you'll also be able to enter a question or two or three. It's completely up to you, or a suggestion for our next show.
Perfect. Thank you, Lauren. And even if I don't get a chance to answer the question on the air, your question may go into being answered in a following one. And it also, if I see enough people asking similar questions, it might become a show topic within itself. So we'd love to have the interaction. Sometimes when I move things around, it doesn't like to go forward without me doing next. Just so you know who I am, I've been in business pretty much all my life. I started my first company when I was 25 years old. My mother said that I had more guts than brains at the time. I think there's some total truth to that. But I've spent my entire career as a business consultant on mostly in the last several decades focusing on finance, turnarounds, etc. But believe it, or I've been around it all, and I have been fortunate enough to be a business advisor at the SBDC. I bet you I'm over 10, 15 years that I've been with the SBDC. So that's a little bit about me. Now, last week, what we did is we started talking about the pandemic cash flow, understanding your cash position, and we're going to complete that during this program. I'm going to go over some of the things I talked about last week for some of you that are new to me, but I first want to talk about what is this? What am I talking about with the pandemic cash flow? Where am I going with this? This is a crazy diagram, guys. You're not going to know what's going on here. You just want to look at it and go, oh, that's scary. That's all I'm asking for you to do. Just go, that's scary as can be. The reason I'm showing you this is, as I expressed, that I have been pretty much the guru of finance for several decades, and I have been an interim CFO for all size companies, from small companies up to 60 million. And what I would do in that position is I was always gathering information and using Excel and using financial analysis to be able to understand what was going on in the company and then advise everybody from the controller, you can pay these many bills, to the sales manager, we need to get this much more in sales, to the CEO of the company, hey, we need to do better on this aspect. These numbers would run everything. I would have a full understanding of what's going on in the company. In fact, it was funny because this one company, I was their interim CFO for 7 years. I don't know if you can be interim for 7 years, but that's what ended up happening. And every week or 2 weeks, I would have the controller send me some of the numbers from the financial reports, right? And she would plug in to one of my Excel documents that I created to answer certain questions such as this. And I would be able to say and recognize every single thing that was going on within the company. So as I expressed last week, what I was doing is I was using this to say, how much are we bringing in? How much do we have in that we have to pay out? And more importantly, what money do we really have, because we were always short on cash to pay out. And I remember like a couple times I would say, I told the sales manager we cannot sell below the selling price. You actually, somebody here bid on a project below the selling price. And she would say to me, how do you know this? Do you have cameras in our office spying on you? And I was like, no, I know it because these numbers tell me so. The reason I'm telling you this story, guys, is if you understand how to take financial data and you understand how to analyze the financial data, you will know what's going on within the company. I want you to think about it in these terms. If you look at a body and you look at an x-ray, you know what's going on in the body. When you look at an x-ray and you know what's going on in the body, you might detect something that's an issue. Like, look, this is something here. We don't know what this is. Let's do a scan. Let's do an analysis. Let's do a biopsy, right? And then they can catch something before it happens or gets out of control and try to cure the person. Same analogy for a business. When you understand how to take your financial data, extract it from your financial statements, analyze it, it will tell you certain things that are going on, have gone on, could happen in forecast. It's like an x-ray into your company. And then you're able to make better decisions. If there's one thing that I try to do in all my communication with clients is get them to have a better understanding of what is going on financially within their company. Larger companies do this constantly. Small companies don't do it at all. And I always say, larger companies, we were losing other people's money. You guys are losing your own money, your own bank account, your 401, your kids' education. It's so important to know this. So I'm wanting to first introduce with this is the concept that there are analysis that can be done in your company to give you a better understanding. You know, going back to the story, when I started my first company at 25, it was a marketing company. It was basically an advertising agency using the Macintosh. That kind of shows my age. It's when Macintosh first came out, right? So I was just the warm fuzzy marketing person at first before I went on to get all my finance degrees. And I remember going to my CPA then and saying, isn't there some numbers I can do to analyze my business? I can figure out return on investment for marketing. Isn't there some numbers? The CPA couldn't help me. He didn't know any. And I now understand because CPAs, their focus is to take historical data that already occurred and reported on tax returns, whereas financial officers, chief financial officers, look at data to do analysis. So what I'm teaching today is the concepts and mindsets of a financial person in analyzing the data. Okay, so data. What you have to do is you have to extract the data from reports. This is not like I can run a QuickBooks report and I'm going to know this. These are numbers in the reports extracted and utilized in a different format. Same concept that if I gave you a bunch of numbers like $1 million and 50 cents, $1.20, $10 and 30 cents, and I told you you had to add those numbers and you couldn't use a calculator, you would line it all up by the decimal points before you summed. You took the data, the numbers, you arranged the numbers, and then you analyzed them. So that's what this is about, taking data, arranging it, and then analyzing. Now, data could be in a file folder. It could be in a shoebox. My famous thing is your data in a shoebox, and a lot of people are. That's not a problem. We can work with that. It can be in QuickBooks or it can be Excel. It's just a matter of getting access to the data. Now, some of these slides are from last week because I'm wanting to bring everybody back into the mindset. And for those who are new, kind of get them on the page with us of where we're going. So why did I call it the pandemic cash flow? First of all, it's really similar to a cash flow scenario planning that I would use as I, manage companies' finances. But why I focused on creating something for the pandemic cash flow is that many companies were struggling with these unknowns. Am I going to be open? Am I going to be closed? Are customers going to come back? What's going to happen? So unlike really the way business was prior to the pandemic, you would have outside forces come in, competitive forces, and a business would change, but you didn't have it happen overnight. Like what I'm saying is, say that I had a product, whatever it was, right? But I have this product and suddenly competitors come. I'm not going to go from this amount of sales one day to zero the next. It's going to be slowly happening, which will allow me to have some time to plan. The pandemic didn't do that. It was, okay, you're closed next Monday. So you went from sales to zero sales, right? Then you maybe got some funds through PPP or idle. So you had cash flow, but no sales. But then you were closed and you didn't know how long that cash was going to last. And then maybe you opened, but you could only open a percentage. Or maybe when you opened 100%, customer behavior didn't come back, so you still weren't at 100%. So what happened during the pandemic is everything got sped up. These type of situations that you may have experienced in strategic planning and financial strategic planning with what was happening in the marketplace over a period of time were condensed in what happened within a week or a month. So these situations changed so abruptly and they caused such immense shifts in revenue. I had to figure out a way to kind of analyze, well, what if this happened? And what if this happened? And what if this happened? So I used many of what I had used before as a CFO, but I just tried to make it into this new format. That's all it was a new format. So that's what the pandemic cash flow was. So as I worked with the SBDC clients to create the pandemic cash flow for the clients, what I would ask them is, how much cash do you have in your bank account? Not online, how much is actually in your bank account. Remember, online might be a withdrawal didn't come through, a check didn't come through. This is how much you have that is not committed to any bills yet. And then what are your current overhead bills? What is the payables? What vendor bills do you possibly owe that are past due if you have vendor bills, or due or past due? And what receivables, if you have receivables, customers owing you money, what money is owed to you? And then you have to understand the gross profit margin, and you have to be able to forecast sales on variables. Now, last week we went through this area here. I'm going to just briefly go through it, but today I focus is I got to explain this section and this section, because guys, these two is the special sauce. And you know how special sauce is special because it usually takes a little bit longer to make, or some special ingredient. This is what makes this work, and this is the more difficult part to understand. So we're going to focus on that. So a quick review of this aspect that we did last week. So cash in right here. It's saying what is the amount in the bank account, and it's available cash after everything else has been paid and has come through the bank account. Then I'm saying make your overhead bills, where you're just saying, well, how much is that I owe? Maybe I put in Verizon here and I owe, $100 a month and $1,200 a year, but you're just making a listing of these overhead bills. That's all we're doing at this point. And here's an example of what it looks like. I just stuck in numbers, guys, just to show you, but you can see I've got the months, I've got the names of the bills, and I've got how much is it per month and how much is it per year. Just a simple chart to say this is the bills we're working with. The accounts receivables. Now, many of the companies, if not, it might even be every single person on this call, you might be using credit cards where you get the payment in 3 days. You don't have to worry about it. But if you're letting a client or customer, whatever you want to call them, pay you on terms, they pay you in 30 days, hopefully maybe 60, 90. In other words, you got open receivables, people owe you. You want to create a chart, but you only want to put those in that you'll be paid and when you must be paid. Because what happens is if you've got a receivable in your 90 and they're not going to pay and chances are you won't see it, don't include that number. We want to go for what we know to be sure. If you know for sure you're getting paid, that you put it in there. If you don't know for sure, you keep it out. When in doubt, in this case, keep it out. We don't want to count on cash that's not coming in. Now, if you have perhaps vendor bills that you pay out, you want to put in when do you have to pay it. So if you think, I know I need to pay this in 30, but I don't know if I have the money, put it in 30. We can change this now. Once again, many of you on the call may not have receivables, customer owing you money, or payables, you owing vendors. You may have just overhead bills because you paid this off, but if you have these, you got to include it. Now, here's where we got to get into the details a bit more. So here's now new information. I just did the others to catch us up. Gonna slow down to go over this part. Now, you must know your gross profit. You have to know this number. This is key to creating this cash flow. And keep in mind, although I'm calling it pandemic cash flow, what I'm teaching today, I'm going to suggest that you not only create this for now, but you start using this process I'm teaching you on a bi-monthly, monthly, at once a quarter, whenever your cash position change. For companies that I would oversee as a CFO, I was doing it weekly to bi-weekly, depending on their cash position. So this is something you can be using on going on board. Now, we got to know the gross profit. You're going to understand why you must know the gross profit in a bit, but I'm going to tell you what it is in case you're not familiar with it. So the basic formula is revenue minus cost of goods equals gross profit. Let's just go into names. What do these names mean? That's all we're going to work with right now. When I say revenue, I could mean income, same word. I could talk about my sales, same word, or I could even talk in units. I could use an individual unit like a selling price, right? But when I say revenue, income, and sales, these all mean the very same thing. You'll see that when you talk to somebody that's more on the CFO level, they use revenue a lot. That's kind of the standard word in that terminology. Income is another one that you hear. A lot of times in some of the accounting software, it uses sales. It makes it a little confusing because these words are used interchangeably. And my big joke I tell people, because when I first went through finance, I also had been a banker and I went through this training as a banker, and they would use these words interchangeably, but I didn't know. So I thought they would be talking about 3 different things, revenue, income, and sales, when they're only talking about one. And I would get so frustrated. I was like, why do they do this? And then, of course, fast forward, I know it so well. I do the same thing to people. And my joke is the reason why finance people, other than perhaps other professions, has the same thing with many different words, we keep you continuously confused so we can charge you more an hour than any other consultant. I come up with, that's why we have so many words meaning the same thing. Okay, let's go back to this. So we got revenue, could be income and sales, but I can also look at this as a selling price. Now, cost of goods sold is actually how it's often heard. I abbreviated cost of goods. Cost of goods sold is the cost to, notice, produce your product or service. Now, some companies, such as consultants, they may not have any cost of goods sold. In the case, it would just be revenue would equal gross profit. So if we turn around and we say that I have maybe a chair I sell for $10, making this up, right? My cost of goods is then $8, you can see that my gross profit is $2. So I just did a simple little math, right? This is my sales, and this is my cost of goods. You can see I do $2. Now this could be a unit. This could be per unit, right? I could turn around and I could do the same thing with just a bunch of more zeros. My sales at the end of the year is 10,000. My cost of goods at the end of the year is 8,000. My gross profit is 2,000. You see, it's the same calculation no matter how I look at it. But it's an extremely important calculation because 2,000 is how much money I have left over to pay my expenses. How much money I have left over to pay my expenses. Now, when it comes to doing a cash flow and forecast, it becomes real important to use the gross profit when you're forecasting. When I'm looking at a static cash flow and I just want to know how much cash do I have now? It's simple. I can say this is how much money I have in the bank. This is how much money I have in receivables coming in. I add that money coming in, I add it. This is how much money I have to payables, vendors, I owe money. I subtract it. This is my overhead expenses. I subtract it. This is the money I have left over in cash. Very simple. Just like doing a personal home budget, right? Where we want to do a forecast, where we say, this is how much cash I have today, and this is how much cash I may have in the future. That's when it gets more complicated. So let's take and make a very simple discussion regarding this formula. Let's go back to chairs. I always use chairs. I don't know, not many companies manufacture anything today as much as they distribute, or they have different types of business models, internet, etc., web-based. But I use a manufacturer of a simple chair because people can see it in their mind and they can understand what I'm saying. So let's pretend I did a cash flow for today. I could say I got this much money in the bank. I don't have any customers owing me any money. I don't owe any vendors. This is the overhead. This is how much money I have in the bank. But as I start to forecast, I am forecasting the selling of additional chairs, right? Well, if I forecast the sale price for the chair right here, the sale price of $10, and let's say I forecast that I'm going to sell one chair for $10, right? So I take $10 minus over. No, I can't take overhead only. I got to take out the cost of goods of the sale. Now, am I buying the wood for the chair if I'm not selling it? Yes, it could be in inventory. We'll get into that later, but technically, no. I'm only buying wood when I need to create a chair. So if I think just cash, if I have $10 for a sale, and I have $8 for the wood of the sale, it's the $2 that I actually get to keep after the sale. And that $2 is what gets applied to pay overhead expenses. That is why we have to use gross profit, because if I bought lumber every single month with no variable, not dependent upon sales, I could treat it like rent. Rent's $100 a month. I always use small numbers to make things up. Rent $100 a month. Month 1, 100. Month 2, 100. Month 3, 100. Rent didn't change whether I sold one chair, 0 chair, 20 chairs. The rent didn't change, right? But the chair wood, the cost to purchase the wood to make the chair, or the cost to purchase the chair to resell it, that changes. That is why it's a variable I must consider. And that is why I have to use the gross profit margin, because I know if I sell one chair and it costs me one chair to $8, I got $2, and that's the amount left over. So at this stage of the game, guys, I'm going to show you this again and again. Just understand that revenue minus cost of goods is gross profit. Understand that you have to know the gross profit to do the cash flow. And the reason why you have to know the gross profit to do the cash flow is because you're forecasting future sales. And as you make a sale, there is a cost to produce that sale, that product or service, that has to be subtracted. So you look at what is actually left over in cash. Okay. Now, I said that you must know the average gross profit of your product or service. You can calculate that by taking and doing just a simple chart. You can say product 1, I sell for this amount. Here's my cost of goods. In this first example, it's a consulting. There is no cost of goods, 0. In this one, I sell my product, whatever it is, for $35. And it cost me 17.5. Then I sell my product here for 55. It cost me 21. You can do the subtraction to create the gross profit. Then you have the gross profit number that you can use, and you can say in your cash flow, well, what if I sell 5 of these and 6 of these or 7 of these? You'll see it in a minute, but you once again have to know the gross profit. So the gross profit is the special sauce. While I'm speaking on gross profit, guys, it is mind-boggling to me the amount of SBDC clients that I talk to on a daily basis that do not know their actual gross profit amounts. It is very disconcerting because not knowing their gross profit, they don't know how much they have left over for expenses. And I'm not talking always small companies. Some of these companies been in business for some time. And the first thing I'm doing is I'm making them sit down with, it could be a sheet of paper and crayon, it doesn't matter, but to write down how much does it cost for me to produce something. And you can do this in many ways. Like even if I'm have a restaurant, I can determine, well, how many, let me use it for a bakery. I like to explain that one because I can explain that. Say that you have a mix that makes, 100 cookies, it could be, right? You figure out how much of a percentage of the flour is going in these 100 cookies. Well, if you buy 5 cups of flour and it takes 2 cups, you can say, well, it's for this much money to buy 5 cups, and you just do the math. How much does 2 cups worth of flour cost? And you do 2 cups. You're not doing this analysis every time you sell a cookie. You're doing a check-in, identifying how much it costs to produce, then maybe doing another check-in when an event happens, such as cost goes up. Like right now, we're talking about cost in groceries going up. You would do a new analysis. And so you just do it a check. You get a benchmark of your gross profit and you check the numbers every once in a while to make sure they're still consistent. And I tell people all the time, you hear on the news and you're hearing it now where it says, well, inflation is causing gas prices. And so what's happening now is this big company is raising their prices. It's going to cost you more for a can of soup. It's going to cost you more for an airplane ticket. I'm not here to complain about what's going on in the news, guys. I'm just talking finance here. Okay, let's be really clear. What I'm trying to say is, as the prices started rising prices, what happened is immediately large companies went in and did an assessment, figured out how much more they have to raise their selling price in order to make the same profit, and are making adjustments now. Small companies don't do this. They keep the same selling price because they get afraid they can't make a sale, and their cost to produce goes up. They're hurting their own profit margins, which are usually much slimmer than any company, larger companies would be. And what happens is it gets to a point where you're actually not even making enough money to make it worth it. I call it more broken, more tired. So unless you understand these numbers and know what's going on, you don't know where you are financially if the effort you're producing is actually paying you. I mean, many times I say to people after I analyze the numbers, I go, you would have been better off going to the beach for the day. You want to make something. And so knowing your gross profit outside of what I'm about to talk about now is so important. And as we go on with the show, and I have guest speaker, you're going to hear me coming on a certain show and just hammering more about these financial and analytical tools and what you need to know. But for right now, all this is a chart that shows you how you would calculate your gross profit. Now, I said that you must forecast sales, but then I said this model has something unique. You can base it on a variable or a must be at least scenario. So what I'm saying on this is, a lot of times if I tell people they got to forecast sales, the minute they do is they go, oh my God, I don't know, will I sell this many? Will I sell this many? I don't know, right? Not needed for this. What's going to happen is it's going to tell you where your sales must be at to produce the cash. So sometimes my forecast models create a sales forecast, then I look at it to see if the forecast is valid. Or I create some numbers and then I identify what the forecast may be. Whereas a lot of times for small companies, they put numbers in and they just kind of put them in and then say, okay, that's the answer. Almost like baking cookies. If I can go back to cookies, they put in all the ingredients, they stir it and they go, okay, it's a cookie now. Financial tools and modeling is a little bit different. What happens is you put in the numbers, then you check the relationship and alignment of the numbers and it tells you a story. Then you put in more numbers and you check it. And that's how you get to accurate analysis, by finding out the story. So if you notice, I want to kind of bring your attention to something I just said that you don't normally hear from finance people. I said it tells you a story. Okay. And that's what finance should do. It should tell you a story. It's not static, it's dynamic. I always would say that what I do is I'm able to look at finances and then walk over here, open up the shop door, look behind the shop door and go, oh yeah, that's adding up. Okay, oh yeah, I see. Okay, oh yeah. There should be this relationship between what's happening physically in the company. If it's an online store, a website, a consultant, it doesn't matter what's happening. What's the numbers telling me? If I change these numbers, what would it tell me here? So it's the relationship between the numbers and the story that's real important. And when you get to a feel where you start to go, what would the story look like this? What would it look like this? You start to have an emotional relationship with the numbers. And that goes back to what I was saying at the very beginning, where my client said, do you have cameras spying on us? No, I had been doing their numbers for so long. It's just, I had an intuitiveness with it at that point. I'd see a number and I could see the story. And so what I'm suggesting, and I'm going to show you this, and I'm going to act this out in my Excel as I show it to you, is that not to look at numbers as just these static but dynamic and going, and that so many people think that the goal of their financials in their company is to produce these forms, whether it's a tax form or it's an income statement or it's a balance sheet. It's the forms. Now the forms must be filled out. That's part of our legal and tax responsibilities and liabilities as well, right? So we do have to get to filling out these forms. But if we miss out on the opportunity of taking this data for analysis, we're missing so much. I mean, kind of, it's almost like the last thought is to fill out the forms. The real strength of this data, the real gem of the data, is learning how to use it for better decision making. That's what I'm talking about here, guys. Better decision making. I say, and I said this last time, and you'll hear me say it so many times, small businesses make business decisions based on your gut. Okay, I'm not opposed to gut, but I tell you what, guts do really well with data. I like having data. I like having analysis. I'm still forecasting. I'm predicting something I don't know. So it still takes a little bit of a gut, but I'm doing it based on sound data. So if I can get you guys to do one thing, and that is to start looking at your data and realizing there's answers in your data. You've got to look at your data for answers. But remember, several slides ago, I said you have to extract the data. So you can see what I'm doing here with saying, okay, you know, I'm going to do a sales forecast, or what I did a minute ago, figuring out my gross profit. I didn't extract the data from a QuickBooks. I said, how much did you sell this product for? How much did it cost to make this product? How much did you, I'm extracting data from here, because in QuickBooks it's going to have the big revenue number. It's not going to show me how much per sale. So when I talk about this forecast, what you can do is you can forecast on scenarios. I'm going to bring another chart up right now. And what I'm doing is I'm kind of demonstrating everything I talked about together in this chart, okay? And these are just charts that you can make with a calculator or crayon, or if you're good at math in your head. I just, you know, did it through Excel because it's easy. You can't have a template because you got to kind of create this based on your world. So let's look at, what did I do here? What did I bring together? So the first thing, I used a hair salon in this case. And so the first thing I did is I identified, what am I going to show as my products? Now, there could be several different prices, a color with this, or, you know, extensions with this, or different product sales, but I can come up with like, what's the average? I don't have to examine if you got 50 SKUs. I don't have to examine 50 SKUs. I can just say, how many things that sell for this? I can put them into different categories, right? So over here, all I'm doing is saying, this is what it's called. This is what we sell it for. If I came in, and these are all made up numbers, guys, so don't think who's selling it for this. I made up all these numbers. If I went to get a haircut, it would be $25, right? Well, in this case, what we did is I just put a simple cost of goods in the price for, you know, to get the towel, to do certain things, because I'm doing the haircut myself. I'm not a hairstylist, just in this example. So I don't have labor involved, but I could have labor, but I put the cost of goods as 10. So all I'm doing is saying the color's 40, the product's 15, extensions, the product is made up number, guys. So if anybody's a hairstylist there, don't call me and say, where are you getting the products that cheap? I made up every one of these numbers, okay? But what I'm doing is I'm just saying, this is my selling price, this is my cost of goods. I'm doing the exact same thing I did a couple slides before, right? But now what I'm doing is I'm using a variable, and these could be any months. I didn't put dates in. I'm just saying month 1, month 2, so you get an idea. So say when we start this, I'm going back when they were closed down just to show this as an example. So in month 1, the salon was closed. 0 are being sold. There's nothing being sold, right? In month 2, they were able to open 25%. So they predicted that 20, this is 20 haircuts, 9 colors, 17 extensions. We're getting very granular in this forecast, not saying, I think sales are going to be, because the minute you get away from the root, you start to create error. And the minute we start estimating things based on no analogy, I like to use details. When somebody comes up to me and says, I estimate sales are going to be this amount, I go, how do you know? Well, I just took a percentage. And I'm like, where in the world would you think the truth is going to come out of? I just took a percentage. The truth comes in each and every detail of a transaction. Literally, I had somebody come and predict sales. They were selling an hour rate. They were a consultant, and they were, selling a certain amount per hour. I get their math and I go, hey, how many hours are in a day? Is it like 36 hours in a day? And they go, well, no, why do you say that? I go, well, based on your math, you have to have 36 hours in a day to sell these many hours to get to that number. Guys, I'd love to think that was abnormal, but it's not. When you take it away from the detail, you make up a number and you don't even test its logic. So what we're doing in this case is we're literally thinking, how many units will we sell? How many units are we going to sell in month 3, month 4, we're open 50%. How many units, once again, made up numbers. So don't go for the logic that the numbers went here or there. I just threw numbers in to show you. So what is happening here is this is the number of units sold, okay? That's all I'm doing. So you can see 20 times 25 becomes the selling price. So if I sell it for $25, right? And I am selling 20 units, when I multiply that together, I get the total amount of sales for that month. So all I'm doing is saying, if I sold 20 units, and it costs 25, or selling price is 25, 20 times 25 is this number. If I sold 25, what's the cost? The cost of goods is here. So 20, I said 25 a minute ago. If I sold 20 at $10, that's where I'm getting these other numbers. I changed these numbers around. So if the numbers aren't matching up, I threw this in at the last minute. Don't mind the numbers, right? Because I changed them all around, but I'm showing you the format. So then all I have to do is go selling minus cost of goods equals gross profit, okay? So what I'm doing in this example is I'm taking and I'm determining the selling price of 1 unit, okay? I am concerned, I'm calculating the cost of 1 unit, okay? Then once I have that, what I'm doing is I'm taking the number of units sold, okay? That's all I'm doing is taking the number of units sold and I'm multiplying that by both the selling price and the cost, okay? That is the only assessment I'm doing here. That's it. It's a very simple thing. You can do this on a piece of paper with a crayon. Once again, I threw numbers in just to show you the format, but that's all I'm doing. The goal, guys, is to get to this number right here, this gross profit. I have to have the gross profit to put in the cash flow because I'm not showing the cost of goods in the cash flow. So I've got to use the gross profit in the cash flow, okay? So let's look at the beginning of making the cash flow. All we're doing now is we collected all the data we talked about. We did all the data. We got the accounts receivable if it's happening, the accounts payable. We got the accounts that we have to pay every month as an overhead. All I'm doing in this slide is I'm going, okay, I sent you off and I said, okay, we had a call. I need you to go find out how much is your overhead? What are you paying? What's your accounts receivable? What's your accounts payable? And I need you to figure all this out and then bring all this data back. All I'm doing in this is I'm putting it together. So here's the bank account we talked about. I said, how much is in the bank as of right now? In this case, the number I put in was 9,000. There's $9,000 in the bank that has not been allocated to any bills at this point in time. There's $9,000. I expect in this little example to get $200 from one client owing me money in this month and $100 from a client owing me this money. Okay, we're going to come to the sales forecast here in a bit. We're just going to go through what we've talked about so far, then we're going to put the sales forecast in. So what I'm doing is I'm saying all of this part here, this part, these are added together because what this is cash that is coming in. Notice cash in right here. So the bank account is cash there. The accounts receivables, I'm getting paid, not billing somebody, getting paid. This is already an accounts payable or accounts receivable that I'm waiting to get paid. That client's going to pay me $200 in month one. That another client's going to pay me $100. This is money coming in. So this is my total cash in. Now, cash out. Accounts payables, that's money I would owe to vendors. I have to pay somebody $150 for the wood for the chair, perhaps, that I have on 30-day terms, and somebody else $168 in month two that I've been owing and I'm past 30 days. So this is when I have to pay those amounts out. And over here, this is just my overhead expenses. I made up just a few: marketing, phone, rent, salary, a loan payment. These are the overhead. So these are subtracted because, guys, this is cash out. Okay. So in just the plain simple cash flow, this is cash in plus this is cash out minus. That's why this is added and this is subtracted. Now, because I did use Excel, I could do something cool. I could say, let me first add up what's in a column. Okay, so I'm going to add up all the cash in this column, and I'm going to subtract all the cash out in this column. And this is the difference in that column. Another way of saying it, in month one, the total cash in minus the total cash out in month one is 3,350. Therefore, once month one is done with all of this cash coming in, all of this cash coming out, once month is done, my new balance in the bank account is 3,350. Okay, so let's look at column number two. Column number two is not looking really good because I don't have any money coming in. So the cash in is $100 in month two. The cash out is all of these numbers. That's all the cash out. So in column number two, there is a negative difference of 5,768. When I look at the cash that came in and the cash that came out, I'm short negative $5,768. That's just for that month. That tells me in that month, if I just analyze the cash in and the cash out, in that month, I lost $5,768. So the next question when you say I lost money is, well, what do I have in the bank? What's my bank balance? Well, we know in the previous month, we left with a bank balance of 3,350. So 3,350 minus the negative 5,768 leaves me still in negative territory of 2,418. This is the basic structure of how I'm setting up the cash flow. And by the way, guys, you're going to get this PowerPoint presentation without my scratching on. When I close it, my scratching goes out, and Lauren's going to email it to everybody with the email address they used when they signed up. So what I did, because you got to create this in Google Docs or Excel, or it can be done on a piece of paper because you got to put in the number of lines you need, is I gave you the Excel formulas. So net cash increase decrease, which is this one right here, all I'm doing is it's the sum of cash in, remember cash in, then subtract cash out. And you can see I put C4, you can't see the formulas, but sorry, because they don't have the C's, but C4 plus C6 plus C8. I've added all of these up and then I subtracted all of these. This formula is for when I had actually more numbers in it. I see that, but it's basically what I'm doing is I'm saying an Excel formula where you're summing the cash in and you're subtracting the cash out. That's all I'm doing. You can use, if you're familiar with Excel, you can do a sum, but it's a very, very simple calculation. Just add up these and subtract these. That's all you're doing. Add and subtract in Excel for net cash increase, decrease. And all you're doing is saying, if I just look at the column, if I just look at that month, what is happening within that month? Now, when I look at a cash balance, that's like your checkbook register. What I'm doing is taking the sum of the cash balance, month one, 3,350, plus the cash increase from before. So all I'm doing is adding the two together. If it's a negative number, it becomes a negative number. These are not complicated formulas. This is not complicated to build in any way, shape, or form. Okay. So now I'm going to go and show you something else in an Excel document because I want to bring this all together. And then we're going to open up for questions. So if you got questions, guys, start typing it into the question and answer part. I had to make sure I followed Lauren's advice. I was like, okay, which is it? Okay, let me share something with you real quick, guys. Share screen. Okay, here is an example of one I built in Excel. Now, I didn't use accounts receivables. I didn't use account payables because in my example here, I don't have them. So I didn't use them, okay? So what I've done here is I first have the $2,000 that is in the bank account, right? So that's the $2,000 that I currently have in the bank account. Once again, made up numbers. I want to go down to here real quick. All it's doing is saying 1,000 for rent, 500 for wages. You know, I'm just putting in numbers of what I expect to spend. So everything we have so far, what's in the bank account, you don't run the bank account each time, right? Because this is going to be ongoing, right? So you just have what's in the bank account when I do this analysis. What bills do I have to pay out as of December 1st? I just put that date. So if we look at just these numbers I'm showing you, 2,000 cash in, 1,500 cash out. What's the difference for the column? 500. What's my cash balance? 500, okay? Well, here's this section that I can do as a variable, okay? Here, it's right here. This is this variable section I'm talking about. Now, what I did in this case, just to make it simple, is that I turned around and said, well, based on the 2019 tax returns, I just did a simple one. I said, well, 2019 is when we were whole, right? So how much in the entire year did we have in 2019 for gross profit? I went on the tax returns and I picked gross profit, not sales. I picked gross profit because remember, I want to have the cost of goods always already out. So as you can see right here at the bottom, I used the 2019 tax returns and have a gross profit of 20,000. So using 20,000 as a basis for 2020, and then I included a percentage of opening as the variable, okay? So I'm saying, well, if we made 20,000 in gross profit in 2019, let's look at like, well, that's about how much we hope to make, but let's take that as a percentage of opening. So I didn't do the full on sales analysis that I'm selling this amount, that I'm selling this amount. I first did a quick back of the envelope, as we used to say in finance, analysis. So I could turn around and do the same thing. I could say, well, I'm going to use 20,000 each time. If we're open 0%, we're closed. Another open 0%, we're closed. There is going to be no money coming in. So 0. That's why we got 0. Then I could turn around and say, if we're open 10%, then we would have 2,000 in gross profit. So all I'm doing is saying, what is 10% of 20,000? That's all I'm doing. The formula here is simply drawing from the 20,000 I have right here and multiplying it by 10%. That's all I'm doing. Nothing fancy here, guys. And so 10% of 20,000 is 2,000. So it's kind of saying, well, if I took last year's full amount of gross profit for the entire year, which was 20,000, and I turned around and I said, well, what if 10% of that just came in a portion of time? I can also say, well, what is, now that I told you about the year, I can turn around and I say, I want to do this a little bit better. So let's build on this. So I know 20,000, I just wanted to start there. Now we're going to keep going, is the gross profit for the year. Okay. I'm going to do some back of the envelope. Now, this is not where I'm doing the detail. I'm just doing quick back of the envelope. If I had 20,000 per year, the question is, what is that per month? Okay. I'm doing this live so you can see where I'm going. So 20,000 divided by 12 is approximately 1,666 per month. Okay. So we're just going to say 1,667. So the amount of gross profit per month, and I just use my tax returns, but I could use my sales forecast, is about 1,667. So I'm going to use that number because that's really looking at it at a monthly basis, right? Well, I can see that if that's the case, I am not going to be able to make it at these numbers, right? So I can turn around and I can say, well, I'm just playing with a bunch of things, guys. You just follow me enough in concept. What if my rent was reduced to 5,000? See, I could start playing with numbers. What if it was, I don't know, it might have to be reduced to 3,000. What you're watching me do, guys, is scenario planning. All these numbers I threw in here, so I don't even know how they're going to work out, okay? I threw these in here. So what would I have to be if I was 50%? Nope, that's still not going to do it. I am going to have a gross profit of maybe about 4,000 at what? 100%. Let's check this. Once again, I'm changing all these numbers live, and you can kind of see that I'm able to play with the scenario planning. Oh, 10,000. So if I have 10,000, I'm not going to lose money. But if I have 9,000, what will happen? Oh, I'm down to 620, but I'm still positive. If I have 8,000, what will happen? I'm making this stuff up, guys. You can see where I'm going. But what if I negotiate with the landlord that I only have 2,000 in rent? I'm just changing numbers and making up a story as I go. What I'm trying to demonstrate to you right now is once I put this in an Excel document, once I have a scenario planning, I could say, what if I sold this many units? What if I change my selling price? What if I change my cost of goods? What if I hired somebody? Once you understand how to take data, extract data, and put it in a chart, a simple Excel document. You could do it with a calculator, just you get to see things move in Excel. You can ask any question you want to ask, and the Excel document will tell you the answer. So my goal today was to walk you through a process in which you could build your own cash flow. My goal on a higher level is to introduce you to the concept that if you extract your data and analyze it in many different ways, you will have a much better understanding of what's going on in your company in order to plan for the future, know what's going to happen today, know what's going to happen tomorrow. You're not going to bed wondering. The good news is you're going to know exactly what's happening. The bad news is you're going to know exactly what's happening, okay? It looks at both ways, but you don't make things on your gut. So if I at least impressed you in the fact that, wow, there is analysis I can do. If I've impressed you in the fact that I should be doing the analysis so I don't have to make it up. And like I said, you'll get the PowerPoint presentation, which is going to show you how to make one of these. There's not a template because everybody's got different amounts of rows. And the minute I start making a template, somebody puts it in and they don't understand the numbers. And I hate that because then they get this done and they don't know what they mean. If you build it, you understand it. If you understand it, you can use it properly. So in that, I've got two questions in the chat, or the question and answer. I'm sorry, not the chat, the question and answer. And one of them is, how do you decide if it's a good idea to take out an SBA COVID loan to help provide cash flow for your business? Now, unique to, and I'm assuming you're speaking of the SBA EIDL loan. I'm going to answer it as if you're speaking of the EIDL loan. I'm assuming that's the one you're referring to. What you can do is you can obviously use the cash flow to see if you can afford to make the payment. However, with the EIDL loan, the payments are at such a low interest rate and they're extracted for a 30-year payment time period. Guys, never in the past and probably never in the future will you be able to get a loan with that least amount of interest for that long period of time. That's a business loan. So I'm telling many people that if you can get an EIDL loan, it's not really ever a bad idea not to, because of the fact that it's a low interest rate. You've got many years to pay. You can prepay it without a penalty. If you change your mind and you put the money in the bank and you just pay it back, there's no payment penalty, and it's not personal guaranteed. There's so many great advantages with the EIDL loan, EIDL loan, and it may not be around for past December 31st. At this point, it's sunset. It's not going to be around past December 31st. I only say May because every time I say something's going away, the government would do something. But as of the information we know now, it is done December 31st. So if you haven't taken advantage of this, it's a very good loan to take. As far as the second question about a list of who's getting funding and if there is new funding with the new Build Back Better, no, nothing has come out about that. There is no existing knowledge on that whatsoever. And as far as new funding, there's little grants here and there happening, but in relationship to the PPP no longer is in existence. I saw somebody ask that last time. The PPP is not in existence. The EIDL is the only remaining of the federal loan packages that were available at that time. So I think I've gotten every single question that I can see in the question and answer. I want to thank everybody. I want to thank you for hanging there with me. I'm going to get the PowerPoint. Please go through it. And once again, Lauren, I think she'll be back on here and she'll tell you about her email address. So if you want to get in touch with her to make an appointment with myself or one of the other business advisors through the SBDC, please do so. So Lauren, I am going to pass it back to you and say thank you once again to everybody that is attending.
Thank you so much, Lori. That session was incredible. So much good information. Thank you. Thank you. To your point, I have re-entered the URL for everyone to click on so that you can submit a question and or a show suggestion. I'll put it in one more time now. And then for those of you who would like to receive a link to the recording of this session, please send an email to lsimpson@lbcc.edu. Again, that is lsimpson@lbcc.edu, and I'm including that into the chat one more time as well. With that, Lori, thank you so much for today. We will see you all next week for another incredible session. Thanks, Lori.
Wonderful. Bye, everybody, and have a happy Thanksgiving.
Happy Thanksgiving. Bye.
Bye.